Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. Quick look again at Bitcoin, seeing what's going on. We're going to talk about retracement here, potential for Elliot Wave as well, and just simple liquidation levels in the back end, just kind of get perspective on what's going on here. So if you are new to the channel, just want to ask that you quickly hit the like button, comment below. Deeply appreciate that. Obviously, you've been watching for a while. You're doing that in every video. I super appreciate that. Helps get this in front of more people so they stop getting destroyed by Moon Boys. But the truth is, Moon Boys were right this one time in a few years. They haven't been right in quite a while. So congratulations on that. But things are pulling back right now. The truth is we can't just blindly jump into longs right now. And honestly, taking shorts is still pretty risky compared to, considering how well Bitcoin is, I guess, maintaining. But once more, the bottom does appear to be dropping out. And we're just going to talk about that. So areas of liquidation, let's talk about that first and just quickly understand the last 7 days here. We can see a pretty sporadic amount of liquidation to the downside. So there's no like super heavy concentration. What we may, and a lot of times the best thing to look at would be smaller time frames. So we can just quickly peek at the 12-hour and see where we're at here. Because again, we got a lot to the upside and downside. So roughly that low 85K range, 85 to 84,000 is that next area of potential retracement based on liquidation. So just know the price does lose 86. We could probably see 85 to 84. I'm speaking in round numbers here, but generally how it works is round numbers are kind of key levels, if you will, just based on psychological support and resistance. Just the mindset of how people think, right? Having said that, we can see we've already wicked down to 85,000. So that's likely the reason why we see a concentration just below that level. So I would be on the lookout for 85 to 84. That might be a possible reality for us. We take a look at this here, the delta. Oh my goodness, that even went higher than the last I looked at this here yesterday. We are looking at 30 billion for the highest point in which we saw liquidation delta. Again, folks, this is that natural capitulation, that natural pullback. This is what I was talking about. Honestly, should have happened between 8 and 10 billion, but I guess we tripled that, and obviously the price went up pretty high. But now, the realism setting in. Okay, selling pressures continuing to increase, and we can see that delta pulling back probably closer to about 20 billion now, if I can see that correctly. So while that's good, it's still not quite enough. What that basically implies is that longs are going to continue to get liquidated, or they're going to just continue to secure profits. Unfortunately, the way the market is right now, most people are probably just going to hold on until they get liquidated, which is really sad, but that's just kind of the nature of how this euphoric type of market really how it happens. It happens a lot. Take a look at this here. The most amount of open interest for Bitcoin is at 89,800. You know how sad that is? People are taking longs at 89,000. That's insane. Anyways, easier said to say that now, of course. Hindsight's totally 2020. Not discrediting you if you got in at that level, but truthfully, you don't try to catch a falling knife, or in this case, whatever the inverse would be for the price shooting straight up. Or if you do, that's okay if you do, just make sure you secure profits, you have a stop loss in place. If you got in at 89,000 and your price point, you have no stop loss right now, you're absolutely doing it wrong. And if you're like not worried about it because your liquidation level is at 60K, you're probably okay. I don't think we're going to see that, but the truth is you should never trade with that much of a swing built in, if you will. Anyways, let's talk quickly about this Elliott wave here and then move on. Because if you go into the daily time frame here, we can kind of recognize that this was a pretty significant expansive wave. And to a lot of folks that ask if I use Elliott wave, the short answer is yes, but I use it sparingly. Some folks will just religiously use it and absolutely get demolished because it gives you way too big, or the ranges are way too large, especially on these kind of movements. But the easy way to understand it is if the price does pull back, the 0.382 level is common. In fact, actually, let me redraw this out here and just kind of give you perspective on where we could go. Okay, again, this is just kind of a preface. I do have the larger macro fib levels here pulled up, by the way. These are the expansive waves. So in other words, when we see the price action, it was topped out at 74,000. When we broke through that level, we hit 1.272, 1.414, and pretty much consolidated at 1.618, that $89,000 range, and pulled back. So again, standard 1.618 for the win. So I'm going to go ahead and remove that just for the sake of this this example, and to give you perspective on where the price could pull back to. The typical retracement for coins that are overextended, like we're seeing right now, is a 0.382, 0.5, 0.6, fib level. So 81,000 would be a logical place in which the price could pull back to pivot. 0.5, 78,400, and then of course right back where we started at that like 75 to 76K range. I'm not proposing that's going to happen. I think it's less likely. In fact, 80,000 will probably be a pretty solid support range just based on that psychological number. But the truth is, we should at the very least probably see the 84.5 or 85K range, not only based on this type of pullback, Fibonacci retracement, but also just because we see a lot of liquidation kind of accumulated between 84 and 85K. I haven't done the math yet, but obviously each one of these bars is somewhere in the range of 100 to 200 million, and that's a pretty large amount, okay? So liquidation, folks, if it wasn't for liquidation levels or high leverage, we probably wouldn't see this kind of movement. That's just the bottom line. Because again, folks, these liquidation areas, half of them, which people are crazily hedged at, they're the reasons why Bitcoin's moving the way that it is. Because every time Bitcoin made a leg up, there was billions of dollars in liquidation just above it. It continued to happen over and over and over again. Anyways, just something to pay attention to. So daily time frame, let's work our way down. We did already look at our weekly yesterday, and the general consensus is that it's truly bullish. There's no other way around it. So that is just kind of the overall sentiment here for Bitcoin, okay? So there's no other way to really explain where we're at. And again, we could pull back tremendously to even the upper 70K range and still be considered bullish right now. So you got to recognize macro timeframes are going to be a little misleading. So we want to focus more so on the 4-hour and the hourly to kind of recognize where we're at there. But let's just quickly get a baseline here on the daily time frame and go from there. So while we're waiting for the SMAs to pull up, we can see here that our RSI is starting to pull back. This is generally construed as a leave your long position open kind of signal. Now, granted, I prefer to use the 4-hour RSI for that crossover to take profits. But from a daily macro perspective, if you're holding on for a long time, you're more of a long-term swing trader, you're still in good shape. That's what this boils down to. Okay, so that really just implies keep your long position open in profit, which I know is contradictory to everything we've kind of talked about so far. But the truth is, again, macros are slower time frames. They're going to move a little slower, so you're going to get these kind of signals. Basically, you're going to be late to the party in a lot of cases if you only use the daily time frame. The whole point here of using this is just kind of give us a perspective that the overall trend is up. The macro trend, obviously, it doesn't take a rocket scientist to know that we're still trending positively here. And until we lose this, ascending trend or break below the 20-day SMA, Bitcoin's still in very, very good shape. Okay, I'm not saying it's a guarantee, but it is a distinct probability that 20-day SMA will start to line up with the price action. And as we can see here, this ascending trend, pretty obvious too as well. Let's go ahead and clean this up just a little bit. You can see how the price action is running concurrent, or more importantly, this trend line runs concurrent with the 20-day SMA. So generally speaking, whenever I draw out trend lines, it's gonna be aligned with the 20 or the 50-day SMA. And in this case here, again, that's still a positive sign. So that reaffirms the fact that we do have some support here at this 84.5, and it's a logical place for the price to pivot. In fact, if you take a look here, you could see that the likelihood of the price bouncing off that level is quite high, just based on the overall sentiment here and how well we've come up. And the likelihood of it coming down again to that low 80K range is still possible. But we got to give this local support an option to hold. And when I say local support, we don't have a lot of volume at this range here. So that's actually not as much support as you'd like to have. But with it being A, a fib level, and B, a liquidation range, there is support there because that's, people will have their liquidation events and their stop losses placed in specific areas. And generally those accumulation areas, such as liquidation, are areas of support. Okay, so it's not the other way around. You don't, liquidation levels aren't based on support, support levels aren't based on liquidation. It's based on the fact that it's support, okay? So the whole point of me mentioning that is just to give you perspective that we're still in a good situation here. We're crossing down underneath 70 at this point, so you should have secured profits by now if you had a long position open. Trying to get super greedy, this is not the kind of market for that. Folks, if you got into a long and anywhere in the 70K range, you're doing pretty well right now. Why hold on and be super greedy? Again, depends on what you put into it and what kind of risk tolerance you have, obviously. But for the most part, you should have secured profits within the last couple of hours and or even when we hit that 90K threshold, because big, large, round numbers, they have a tendency of holding as resistances or supports. In this case, we can presume 90K, being that highest point we just saw, is a likely resistance level for us. All right, so again, we can say the same about 80K too. That's just much further away. Either way, we look at it, 4-hour time frame is starting to diverge. We're starting to see some cracks in the glass there. Stochastics pulling back. We're still over the trend line here, folks. This is not dire straits, but still definitely not the most ideal situation. So I don't love the idea of just taking a long right now because you should take a long because you feel like you got some FOMO. I think that's a bad idea. If we do take a look at this here, again, this is just a crude illustration, but generally speaking, these do break to the downside when you see the price keep retesting as support. Okay, so I think it's more logical for the price action to do something along these lines before it were to, before it were to continue higher, right? So anyways, I'll provide a playout chart on our Twitter, Telegram, and Discord as per usual, but we keep retesting this 86K range. It's just a matter of time before it breaks. I think it's less likely for the price to pivot from here, which also implies that if you're considering trading altcoins, you may want to consider, averaging into your position on the way down, because at this point, there's no guarantee the price is going to stop for altcoins. Maybe you can trade into some significant support ranges, but at this level, this isn't phenomenal trading conditions, but it's par for the course for a significant uptrend that's now pulling back. Okay, and we see here on the left-hand side, we can see the lagging span is free and clear. Conversion line still has momentum to the upside, and the cloud itself is consolidating between 84.5 and 86.5 right now. So the good news about this is that it provides us with a support zone, basically $2,000 range, which coincidentally is right here in this area. Okay, so it would make sense logically. Again, we've seen a lot of illogical moves lately, but the truth is, from a technical standpoint, liquidation, everything kind of combining together, 84.5 to 85K should be a support level that is retested here before the next leg up. And if that doesn't work out, folks, secondary to that, to clarify, again, we are looking at this 0.382 fib level, roughly 81.1 as a worst case scenario. And I say worst case scenario just as a tentative number. It could absolutely get much worse than that. But we have to give these support ranges a chance to be able to hold leading into it. Okay. And again, a lot of times when you're doing these kind of free falls after a significant expansive wave or continuation higher, you got to respect each support level, treat them like one until they prove otherwise. So if you were to consider a long, you're going to want to consider along with low leverage or low position size, so you're not getting too crazy. The price, if things turn around on you, make sure you have either a tighter stop loss than usual, or you're just watching it closely. Okay. Do not be the kind of person that doesn't set a stop loss, continues to add to your position as the price goes down on a leveraged trade, and just continues to wash out your entire account because you chose to use cross leverage and be a very irresponsible trader. Don't do that. It's going to bite you in the butt. I get tons of people coming over to my community that do that consistently, and then they come over, asking for me to recover their portfolio. When truth is, I can only help you with, best practice moving forward. I cannot go back and change time. So, anyways, I'm just kind of throwing it out there, letting you know that this is not, you got to treat the market with respect right now. It's a very unique situation. I know you've seen a lot of people online showing how awesome their trade results are. I guarantee that's probably circulating right now. But if their leverage is anywhere over 10 to 20x, I wouldn't trust it because it shows that they are very risky and they're probably not worth following. It's just my personal opinion, though. I'm totally off in some ways. I mean, I totally missed the leg up from 77 to 90K, all right? But we did catch the previous leg up from like the lowest, from the upper 60s to the mid 70s. So you can't catch them all, folks. That's the key takeaway here. And you just gotta kind of go with trust your instincts, trust your gut. If you don't have instincts yet, just use low leverage, low position size until you get more confidence. All right, enough about that. Make sure you check out Bitunix, folks. Awesome exchange, link down below. We are soon to unlock our full 60K prize pool, which is pretty amazing. So congrats to those traders who are doing really well with that. And then alternative to that too, make sure you tune into my Twitter, Telegram, and Discord. I do have a pretty good little summary of coins that I cover. It's all here for you. But I'll post our playout chart here shortly. Thanks again. We'll look forward to seeing you in the next one. Have a great rest of your day. Take care.